Chapter 12, Unit 2, Investigation. Investigation Basics. Meaning: investigation means systematic and in-depth examination or inquiry to establish a fact or to evaluate specific situation. Audit versus investigation. Basis: investigation objective aims to establish a fact or assessing a particular situation. Verify whether financial statements are true and fair view of state of affairs of entity. Scope: investigation may governed by statute or it may be non-statutory. Audit may scope is wide, and in case of statutory audit, scope is governed by law. Periodicity not limited by rigid time frame, quarterly, half yearly or yearly. Nature requires detailed examination, involve test checking or sampling. Limitation: no inherent limitations. Suffer from inherent limitations. Evidence: seek conclusive evidence concerned with prima facie evidence. Appointment by even third party appointed by owner or shareholders. Reporting reported to person on whose behalf investigation is carried out. Reported to owners of business entity. Steps in investigation. Step 1: determination of objectives and establishment of scope of investigation. Step 2: formulation of investigation program. Step 3: collection of evidence. Step 4: analysis and interpretation of findings. Step 5: reporting. Important issues to be kept in mind by investigator while preparing his report. Report should not contain anything which is irrelevant. Every word should be properly used to minimize possibility of different interpretation. Basis and assumption made would be explicitly stated. Report should clearly spell out nature and objective of assignment accepted. Report should be made in paragraph form with headings for paragraphs. Opinion of investigator should appear in final paragraph of report. Special issues in investigation: whether an investigator is required to undertake cent% verification approach or whether he can adopt selective verification. It depends on circumstances of case under investigation. In case of cash defalcated by cashier, examine all cash vouchers. In case of arriving at profitability, verify on selective basis. Whether the investigation can put reliance on already audited statement of account. Investigator is entitled to put reliance on audited financial statements unless he finds that audit is done very casually. However, if investigation is launched due to some doubt in audited financial statement, no question of reliance arises. Whether an investigator necessarily requires assistance of an expert. Investigator may obtain views and opinions of experts to properly conduct investigation. Whether to retain working papers or not. Investigators should retain full notes of work carried out and all working papers in his files. Special aspects in connection with business investigations. Factors to be considered while studying economic and financial position of business. Academy of fixed and working capital, trend of sales and profit in future. Whether profit is expected to maintain in future would yield adequate return on capital employed. Whether business is operating at 100% capacity. Factors to be considered in assessing future maintainable turnover. Trend: past trend of sales, marketability, possibility to trend sales in new markets, political and economic consideration, effect of government policies and economic trends on sales, completion, effect of completion and company's share in total trade, types of investigation, statutory, investigation under Companies Act 2013, non-statutory, investigation on behalf of incoming partner, investigation for valuation of shares in private companies, investigation on behalf of bank possessing to advance loan to company, investigation on behalf of an individual or a firm proposing to buy a business, investigation in connection with review of profit or financial forecast, investigation of frauds. Investigation on behalf of incoming partner. Steps to be involved in conducting investigation on behalf of incoming partner are: ascertain history and growth of firm, study provisions of partnership deed, scrutiny of profitability record of firm's business, examination of asset and liability position of order in hand, and quality of clientele, position and terms of loan finance, study composition and quality of key personnel employed by firm, important contractual and legal obligations should be ascertained, was reasons for offer of admission to a new partner would be ascertained, manner of computation of goodwill on admission and retirement should be ascertained, investigation for valuation of shares in private companies. There are two main methods of valuation of equity shares: net worth basis, yield basis. Net worth basis value is determined on the basis of net worth of company. Amount of net worth is divided by number of equity shares to arrive at value for one share. Yield basis average profit earned by a company during preceding 5 to 7 years is computed, then value of business is calculated by capitalizing average profit at reasonable rate of interest. Investigation on behalf of bank or financial institution proposing to loan to a company. Investigation accountant shall collect information on following points: purpose for which the loan is required, schedule of repayment of loan submitted by borrower, financial standing and reputation of directors and officers of company, whether company is authorized by memorandum or articles of association to borrow money, history of growth and development of company and its performance during past 5 years. To investigate profitability of business for judging accuracy of repayment schedule furnished by borrower, investigating accountant shall take following steps: prepare condensed income statement from P&L for past 5 years, compute mentioned ratios separately: sales invest sales inventory is held, sales to inventory is held, sales to fixed asset, current ratio, quick ratio, equity to long term loans, and return on capital employed. In the breakup of annual sales product wise to show their trend. Investigation on behalf of an individual or firm processing to buy business. In case of proprietary concern or partnership, reasons for sale of business, length of lease under which premises are held, unexpired period of patents, age of present managerial staff and prospects of their continuity in service, valuation of goodwill. If business belongs to company, authorized and issued capital, uncalled liability on shares, particulars of dividend and dividend paid in past and areas of dividend, mortgages on asset created, registered of charges, price at which shares are often offered. Investigation in connection with review of profit or financial forecast. There are many investigations which involve an examination of future profits, like future profits reports can be required for purchase of business by bank and financial institutions regarding project cash flows and profitability statements for appraisal of loan applications submitted by borrowers. Investigation of frauds. Categories or types of fraud: fraudulent financial reporting, misappropriation of assets, corruption, or bribery. Some situation in which fraud can occur along with investigation procedure. Cash receipts. Cash receipts fraud may be done in following form: showing larger cash discount than actually allowed, adjusting fictitious credit in customer account, adjusting cash sale as credit sale, writing off good debt as bad debt and irrevocable, undercasting receipts side of cash book, verification of cash receipts. Carbon copies of receipts are duplicate should be scrutinized. Cash sales should be vouched in detail. Recoveries from customers and cash discount should be checked. All withdrawals from banks should be checked. Inflating cash payment. Cash payment frauds may be done in following form: making double payment of invoice or paying false invoice, paying personal expense out of business by falsifying details, false false falsely adjusting in customer account, wrong excess totaling of wage sheets. Verification of cash payments. All the evidence as regards cash payments made sh- should be carefully scrutinized. All payments by bearer checks should be examined. All withdrawals from banks should be checked from entries in bank passbook. System of recording wages should be reviewed. Frauds through supplier's ledger. Fraud to supplier ledger may be done in following form: adjusting duplicate invoice or purchase in supplier's account, suppressing credit notes issued by suppliers, withdrawal amounts unclaimed by suppliers, accepting purchase invoices at higher than market prices, verification of balance in supplier's ledger, verify purchase journal with goods inward book and supplier's invoice to confirm that supplier's account is credited correctly, request all suppliers to furnish statement of their accounts, identify possibilities of collusion with suppliers. Fraud customers ledgers. Fraud through customer ledger may be done in following form: teaming and leading method, that is misappropriating account collected from customer and crediting his account only when account is subsequently collected from another customer, misappropriating account collected from a customer and subsequently adjusting his account by crediting amount as rebate, crediting account received from a customer to account of another customer and subsequently withdrawing amount wrongly credited. Verification of balances in customer's ledger. Special attention would should be paid to account amount adjusted for goods returned or difference in price. Obtain confirmation of customers for balance standing in their account. Inventory frauds. Inventory frauds may be done in following form: employees may remove goods from premises, theft of goods may be cancelled by writing them off as damaged goods, inventory records may be manipulated by employees who have committed inflating quantities issued for production, verification of verification procedure for defalcation of inventory, entire system of receipt, storage and dispatch of all goods should be reviewed, establishing items and quantities of inventory defalcated by physical verification, check whether material issued for production was excessive. Indicators of fraud. Several indicators of possibility of possible frauds are discrepancies in accounting records, including incorrect or delayed non-recording of amounts, conflicting or missing evidence, including missing and altered documents, unacceptable management responses such as denial of access to records, unusual delay in providing requested information, unwillingness to address deficiencies in internal control, etc. Other indicators such as frequent changes in accounting estimates, etc. Fraud diamond. Four elements of fraud: incentive, opportunity, rationalization, capability. Incentive: I want to or have to need to commit fraud. Opportunity: there is a weakness in system that the right person could exploit. Fraud is possible. Rationalization: I have convinced myself that this fraudulent behavior is worth the risk. Capability: I have necessary trait and abilities to be the right person to pull it off. Unit 2 ended.